Hey, what's going on, everyone? Welcome back to Millennial Investments. Today, we're going to be doing something a little bit different. This trade review is going to be based off of a follower request, one of our investors that asked us to review this trade. The ticker is going to be UAMY. Before we get into it, though, I want to encourage everyone, if you want to review a trade together with us here at Millennial Investments, feel free to just simply comment in any of our videos moving forward and let us know. And we'll be sure to do that for you to give you our perspective on how to play the trade and what we would look for in the trade if we were in it. With this stock, we're not currently holding a position on it, but I just wanted to at least provide some technical analysis on it, some fundamentals, and basically give everyone else an idea while we're doing this video. But to move forward, I'm going to start with the technical analysis and things that stand out to me the most. It's the fact that we had resistance here around January 26th, where the stock was sitting at $1.08. Once it retested that level, you see this gap up that we had on the 9th of February, and since then it has been trading fairly well above that $1 level, going all the way up to about 252 on its peak before consolidating down due to the market pullbacks this past few weeks. It's currently March 9th today. It got pulled back by the market pullback overall, hit that level of support again at the 104 and has since then bounced up, sitting at 130 going into today. One thing that I want to pay attention to, if I were to get into an entry right now, I would have looked for entry around that 104 to 110 area and then allowed it to bounce to this 130. I would be up currently about give or take 20% or so. But ultimately, what I would look for after it breaks that 130 is support above the 120 moving forward. I could let this go. I'd be up about close to 8-9%, if not 10 at this point, and let it ride back up. Of course, this follows well with the SPY. It's listed on the New York Stock Exchange. They're focused on I was just looking at their overview, so I want to be precise in what I provide you in this. They're engaged in the production and sale of antimony and silver, gold, and zeolite products. The company is a mining, transportation, milling, smelting, and marketing company. It has 3 different segments. It's currently in the United States. It has operations in Mexico, and then it has the United States zeolite operations as well. And they have about 4 or 5 mines, 1 in Montana and 3 a smelter and 3 mills in Mexico. I'm sorry, not mines, mills. But anyways, looking at it from a fundamental basis, I'm not too happy with it. EPS is currently showing negative 118% EPS growth over the past year. Of course, full year for 2020 hasn't been reported yet. I'm interested in seeing that. And then, of course, net profit margins are currently down about negative 121. But really what I've been paying attention to a lot is the market capitalization compared to the common equity ratio. And this is currently sitting at 7.8165, about a point 1.9 above its 5-year average, which is pretty good. And what that tells us is that there's a lot of investor sentiment this is going to continue moving higher. It's much more valued than where its current stock price is sitting. Currently sitting at $132 million market cap, though, and it has about 102 million shares on the market. So very low float, very low market cap, though. It's currently trading at 130, like I said. If you're jumping into this position right now, look forward to hit that 175. If you weren't able to get in between that 104 to 121 buy zone, and now that we are above that, if you did get in there, theoretically, let this ride out to that 175, capture your gains on the way up. That's about 65 cents to the $1.04 or the $1.20. So if you do the ratio there, that's about 40 cents to top 61 cents. And you can kind of do the math there. So we're looking at potentially 40 to 60% on the trade. If you were able to capture this in the buy zone, leading up to the 175. If it breaks through the 175 due to the markets pulling back and we see strengths like in the SPY going back to the 395, you can expect this easily to go back strictly on momentum and the weight of the market pulling this up back to the let's be specific here. I don't want to lead anybody up, about the 212s. So that's an additional 37 cents that you could gain off of it, which is about another 30 to 35% on the trade from the 40 to 60% we were already looking at. So you're looking at close to 100% overall, just to sum it up. And at that point, I would suggest potentially doing like what we call our split and run, where we would cut half of our position to lock in our initial investment costs, allowing for the profits to continue moving forward. Now, one thing that stands out to me about the company and its growth overall, in 2018, it was actually positive on its EPS growth and positive on its net profit margins. I would look to see what happened between 2019 until now. It actually just received some news from the New York Stock Exchange about a stock offering that it did. Basically, I want to go into detail about it. I'm not gonna try to speculate. So, basically stating they received a warning letter as provided under Section 1009. This basis was for the fact that the company sold shares of its common stock in a manner that violated Sections 301 and 713 of the company guide, and basically was not allowed against the NASDAQ rules. NYC rules. NYSE rules, excuse me, and it ultimately caused the stock to be halted around February 18th or something like that, or February 13th, I believe, and the stock didn't come back online until, a little bit after that. As you can see, we started jumping back into play. Where are we at? Right here. That's probably that gap up that we were seeing right there. Anyways, but when it did come back open, it bounced above that 120, and like I said, it's been moving higher ever since. So watch those key levels moving forward. If you weren't able to get into this buy zone and you were jumping into it now, it's not a bad buy, as 132 is the last level of support that we were at, and it looks like it's trying to break through that. I'm going to bring in my momentum indicators in here just so we can get a clear eye on what is currently looking like on the chart. And what that stands out to me is an EMA compression is what I call it, where the stock price is currently trading above the 13, 34, and 55 EMAs, and the 13 is starting to meet the 34 to cause this compression to break out. And that's why I ultimately believe this will have the momentum to move to the 175 and continue moving higher beyond that, even to the 212, if it has strong enough strength within that momentum push. But most definitely, if you get into it or already into it, watch out for that 175 level of resistance. I would even pay attention even closer around the 141. Other than that, I just wanted to share this with you. If I was going to be doing this for our member, I wanted to share this with the rest of the channel as well, just so you can get an idea of the potential in this move if it continues to work out, but also identify some things that we need to recognize with the company, acknowledge, and do a little bit more DD in. But other than that, thank you for taking the time out of your day. If you have any questions or feedback, feel free to leave it in the comments below. If you have any reviews you want to do, feel free to leave those in the comments as well, and we'll be more than happy to help you. Other than that, I hope you're making money today with the markets pulling back, and good luck trading otherwise. Thank you.